Hi, hope you're having a great day. My name is Jeff Segelke. I'm the president of JRS Wealth Management and Segelke Financial Group, and I am here to give you an economic and market update as of the second quarter of 2021. A lot is happening in the stock market and the economy and in politics, and I just want to kind of try to break that down here in just a few minutes. A little bit about my background for anybody who may be watching this and doesn't know my background. I've been helping people with wealth management, retirement planning, investments since 1998. I'm the president of Segelke Financial Group and JRS Wealth Management. I'm the author of Making Your Dream Retirement a Reality and Retire Today, 2 books about retirement that serve as a blueprint to help you retire. I'm ranked in the top 1% of advisors nationwide. I'm a chartered financial consultant, which is a designation that says I hopefully know what I'm talking about. And I appear regularly on TV and have a radio show that I've had for over a decade now. So hopefully that helps. And I'm a registered fiduciary in the investment world. So that's a little bit about my background. Let's get started. What's going on in the world? Craziness, right? So we're going to cover today the current state of the economy and the markets, where we go from here. Let's talk about the good first. What's good? What's good that's happening? Sometimes it's difficult to see the good with all the bad going on. But there are some really good things happening. For example, earnings per share, or company earnings. That's the revenue that companies are generating. In the first quarter of 2021, earnings were expected to be up about 15.8%, but they ended up going up 34%. And it was a record 87% of companies in the S&P 500 beat their expectations by a record of 24%. So companies are making lots of money in 2021, lots and lots of money. In fact, their profitability is higher than it's been in a long, long time. This is going back the last 20 years, and you can see company profitability is the highest it's been in 20 years. That's amazing. So companies are generating lots of revenue right now and are highly profitable. So that's a good thing for the stock market. Money. There is a lot of cash sitting on the sidelines, a lot of cash. Over $1 trillion retail money market funds. That's just money you and I have in the bank. Over $3 trillion in institutional money market funds. I mean, that is just tons of money, higher than it's been in 20 years. Sitting in cash. And that's money that at some point needs to go to work. It either needs to be spent, which helps the economy, or it needs to go into different investments such as stocks, bonds, something, real estate. It has to be invested at some point. And so that's a lot of money sitting on the sidelines that could add to the good things happening in the economy. So those are some good things happening. What are some causes for concern? And you can probably think of your own. There's a lot of different things going on, but let me just address a couple of things. Price to earnings ratio. This is a measure of what are stocks worth. Are they overvalued, undervalued, fairly valued? That dotted line in the orange is kind of the average of the last many, many years, decades. And what you can see is we are at the highest valuations ever right now, even higher than we were at in 2000. Right before the technology bubble burst, and there was a major stock market crash of about 50%, higher than we were at in 2007 before the crash of 2008. So valuations are extremely high. That's not a good thing. That means the stock market is very expensive. That does not mean it's going to crash tomorrow, but it does mean stocks are highly overvalued. So the only things that can help with that is if company earnings continue to grow like they're growing right now, then that can be okay because the earnings will justify the price, or that the prices do need to come down to match earnings. And so we'll see what happens over the next 6 to 12 months. Another thing that's concerning is, this is a very convoluted chart, but basically what it's saying is there are a lot of jobs out there that are hard to fill, that people just aren't even applying for jobs or taking certain jobs. And so there are millions of open jobs that are not being filled. That's a major problem for those sectors of the economy that need employees. And so that's a major problem right now. Shipping costs are going up. China container freight rates, look at this. That chart is basically showing the cost and it has what, almost tripled, more than doubled. In fact, it has tripled in the last year. That's not good. That means it's costing more to bring over all those goods that we're buying from China. So all those cheap products we buy at Walmart and other stores, it's costing more to get those here. That is causing inflation and prices to go up. So that is not a good thing. This is another thing. I mean, just basically commodities are going up. So lumber prices are going up. Steel prices are going up. I mean, exponentially. You can see by these charts, just out of control. Lumber prices are what, about 3 times what they were a year ago? I mean, that is ridiculous. And so construction is costing more. If you're trying to do any kind of home improvement or build a home right now, not a good time, not a great time, because all materials are getting higher or going up. And so inflation has definitely kicked in materials. This is another thing that concerns us and has for the last year or so. Zombie companies are hitting an all-time high. Now, what is a zombie company? A zombie company is a company in the stock market that doesn't have enough profits coming in to pay out the debt they owe. So they can't even service their debt. So they're either having to borrow more money just to pay on their debt. That's a very bad thing, and it would be the sign of a company on the road to potentially bankruptcy. And what you can see here is all these different years and the percentage of zombie companies, and you can see 2020 in the red at the highest level ever. Over 17% of US stock companies are zombie companies right now. That's huge. And what that means is you should probably not just own an index fund that owns everything, because if that's all you own, then you own 17% of those companies are probably zombie companies. They're not doing well, and they're not going to do well, especially if the economy takes a turn down. They'll do even worse. And so you want to avoid zombie companies at all costs. That's a bad thing. Okay, so what's the bottom line for the stock market, for the economy going forward? What do we like? Well, earnings are much better than expected. We've got massive global stimulus going on that is pushing the stock market higher. Cash is everywhere, Cash is everywhere. And that creates a tailwind that when there's lots of cash out there, that's cash to be spent. And companies are spending lots of money, individuals are spending lots of money, and that is pushing the economy forward and helping companies to be more profitable than they've ever been. Interest rates are still near zero, so borrowing is cheap. Household balance sheets are excellent. We are not over in debt as we were in 2007. The vaccine is unleashing pent-up demand. So you're seeing travel getting back, you're seeing retail spending increasing. A lot of things that died in 2020 are coming back in 2021. What do we worry about? Risk growth assets are expensive, super expensive. Real estate's overpriced. Stocks are overpriced. Investors are pricing in perfection. They're expecting everything to just be perfect in the economy and in the world. And if it's not, that could be a problem. Government stimulus is leading to higher wages. That's creating more inflation. Tax rates will move higher. We still don't know what, but tax rates are going to be higher in 2022 and beyond. And zombie companies and junk debt are a concern. Because again, if the economy worsens, if we go into another recession, those companies that are zombie companies will do poorly. So watch out for that. So what are our 2021 investment themes? Rebalance your portfolio, make sure you're diversified. That means we need to own growth and value stocks. That's something we're doing in our portfolios for our clients. Junk will rally, but don't abandon high quality. What that means is, poor companies are going to do well. Think of some of those companies you probably heard of in the news that were priced at $1 and now are at $5. I mean, that's great, but a lot of those are junk companies that aren't going to do well when the economy tanks again. Valuation will matter again, so valuations are going to matter. Consider international and emerging market assets. We think there is potentially growth potential internationally now. Last 10 years has not been good for international, but finally, we think they're going to start to pick up and maybe catch up to where we are here in the United States. So expect volatility. The market averages a 14% drop every year. Now think about that. At some point during the year, there is an average of a 14% drop during the year. So if the market takes a drop, don't be scared and think it's the end of the world. At the same time, make sure you're comfortable with the amount of risk you're taking. Barbell your approach. You want to keep some assets in highly liquid, safe assets, but also own growth, even if it's more expensive than normal. Growth is still doing well and growing and going to continue to grow probably for the rest of this year. You want to own high quality assets. Avoid companies that rely on financing. Companies that are low in debt are going to outperform over the future, and especially in bad markets. Be careful indexing stocks or bonds with so many zombie companies out there. Again, with so many companies, 17% of stock market companies not even having enough revenue or gross revenue or net income to pay off their debt, to pay their monthly debt load. If they can't do that, they're on their way to bankruptcy. So be careful about what you own. Maintain your long-term plan. The fundamentals will roll over time. And the fundamentals are that if companies have earnings, the stock price goes higher. And so those are some of the things that we're watching. I'd say the economy and the stock market in summary looks good right now. The economy is growing like gangbusters. And so there are some really good things going on. So don't be afraid that the stock market is going higher. At the same time, this cannot continue forever. Stock prices cannot continue to go up like they are. Real estate cannot continue to go up like it has. Home prices are out of control. And so at some point there will be a correction. There will be a bursting of the bubble. It's just not right now. So it's something we're watching very closely, and you should too. So any questions? Feel free to contact us, visit our website, give us a call, shoot us an email. We're always available to do a free review of your current portfolio and your financial situation. And for our clients, we're making sure we're invested in the right way to take advantage of the upside of the market while protecting against a future recession and decline in the stock market. Our mission is to enable and empower our clients to achieve financial independence and a work optional lifestyle. We do that through our proprietary time-tested process that we've created over the years. And that's it. Hope you're having a wonderful day and enjoy the summer, and we'll talk soon. Take care.